Hello listeners, and welcome to the Montel Weekly Podcast, bringing you the most topical energy matters in an informal setting. My name is Richard Sverrisson. I'm joined today by gas analyst Wayne Bryan, formerly known as Wayne Alpha. Also participating on the pod is my colleague Nathan Witkop, correspondent Germany. Welcome to you, Wayne and Nathan.
Thanks, Richard.
Good morning, Richard.
Welcome back, Wayne. I'd like to start by looking at the situation now at the beginning of 2020. Just a few weeks ago, the situation looked quite different. If you could just give us a brief summary of kind of the last weeks of December, because it was quite eventful, wasn't it, Wayne?
Yeah, well, there was quite a lot happening indeed last couple of weeks of December, and even the run-up prior to that. And of course, everyone's concerns was around the Ukraine, Gazprom, EU-mediated talks. Now, as I said to you probably several months before, I always thought it would be signed and it would go until the last minute. And that's what we saw. We got the official announcement sort of right on the end, really, of the year. That, again, made a lot of market participants relieved. And we saw the effect on prices. And we can see that effect right now. I think that concern, even if the transit deal wasn't signed, I still think short-term supply-wise we'd have been in a good position. There have been some strategic placement of gas by Gazprom in different parts of Europe. Also with the storage, not just gas, but LNG storage is at record levels. Renewables are growing. Demand is still pretty weak. I mean, we're now, January 9th today, and it's quite mild still. Sun shining. Not just here, but across Northwest Europe, the weather hasn't seen any real ramp up in LDZ demand. So I think we'd have been in an okay situation, but now we're in a much better situation. Obviously, any concerns around that deal dissipated, and we're now seeing the flows slowly start to ramp up via Ukraine into Europe. So I think, compared to where we were on, say, deck 28th, 29th, we're in an even better position.
I think there's a number of points that I'd like to elaborate on, Wayne. Could you just start off by saying what happened to prices, quite literally, because there was quite a spread between what was happening in the prompt or the day ahead and the forward prices. So could you just, for those listeners who may be unaware of the actual numbers here?
Well, I think the relief, I always said there was a good 10% or so, between 5 and 10%, depending on the contract worth of risk premium. I mean, you saw Q1, the risk started rising for Q1 contracts, which then fed into the summer. I think as well, when you look at the summer contracts, they were more concerned about what was going to happen if we didn't get the deal signed. We're then going to have to drain the storages, and we're going to move into summer with storages potentially below where they were. So that was quite interesting. And looking at what happened with Q1, as soon as that deal was announced, you saw the prompt front month and everything just completely tumbled. Once that gas was confirmed to be coming through from Jan 1st, we just saw, not just the prompt, but the summer contract, UK NBP dove below 30 pence per. We saw a lot of change, not just in the UK, but also in TTF prices as well. And now you look at where the market is now, it's kind of positioning itself at, it's probably where it is now is probably the price it should be at. But however, there is still some concern, especially what's going on geopolitically, the French nuke situation. Weather can always switch. And also there's always a concern, I've always been like that as well, looking at any cuts in pipeline flow, especially from the Norwegian side of it. I mean, again, the price is getting that cheap now. Will we see some commercial reductions? However, again, looking at them wanting to keep the market share, etc., I still don't think we're going to see that at the moment. But there's still always concerns. But where we are now, I think the market is in the correct place when you look at the price structure.
You just mentioned LDZ. For those listeners who may not be aware of that abbreviation, could you just...
It's domestic heating demand. So purely looking at in the UK, looking at, and also you could use that for you, but looking at domestic heating demand, which of course counts, especially in the UK, as the biggest demand side of UK gas. And in France, obviously, it's electrified, so it's a bit different. Other parts of Europe, maybe coal and gas, but LDZ demand or domestic heating requirements, regardless of the country, are way below the levels we're used to seeing.
But we saw the supply from the Ukraine into Slovakia dip quite significantly at the start of this week or late last week. But what are the reasons behind this?
Well, some people think it's storage requirements, refilling of some storages again. But again, I think it was a case of slowly building it back up, and I think it caught quite a few people in the market a bit by surprise. And again, the old fear factor kicks in, so then we saw prices start to rally again. But I mean, I spoke to a few people about that, and we were always confident it was slowly going to ramp up.
And as
we're seeing that today.
Yeah. No, I was just going to get back to that risk you were talking about earlier with the that there would be no deal. So I think that was one of the main justifications for why we had such higher forward prices
Correct.
relative to the near-term prices. Maybe you can talk a little bit about what's happened now. What are the spreads telling us right now about, you know, where we're at in the middle of winter compared to summer? Like, how normal are these prices that we're seeing?
The spreads now are telling us that what we're fearing is what we think is going to happen is it's going to be a similar situation to last year. We're going to go into the summer with storages and overhang. And again, where does that excess gas, where does the gas go this summer? If we go in with storages, I don't know, 70, 80, 90%, again, the requirements for the following winter, we're not going to need to fill storages again. So for me, looking at the market now, it's positioning itself for things to go as planned now for the next few months. What people are talking about, weather, there's no beast from the east at the present. I know weather can change very quickly, but been looking at some of the forecasts, there's still no real sight of any sustained cold snap. Also as well, looking at related markets, carbon sort of stabilised now. There was some reports of it maybe being hitting 50, 60 this year, which I still don't see how that could happen. Oil prices now, we saw it fall again 5% yesterday, so that'll affect some of the forward contracts. But I think we look at the spreads now, the market's positioned for this oversupply to continue, and the closer we get to the end of March without any significant events, and when I mean events, I mean could there be a beast from the east? Could there be a situation where there's a pipeline concerns or flows start to get cut? Could there be a geopolitical issue? And I mentioned that to you guys a bit earlier, talking about what could happen with the Strait of Hormuz, etc. So discounting that, I think what we'll see as we get tick off each month, so to speak, we're going to see the prices again start to dip a bit lower. But there is a floor, obviously. I mean, we're not going to see 20 pence summer gas. At some point, we might have to see some optimization of flows just to keep the price. We've seen it before. If you look back in history at the charts, you can see a lot of pain points for producers where things may have to start getting cut just to really get that demand back up again and get that price to rise back up. But like I said, I think where it is now in terms of across the curve, prices are pretty much where they should be if you look at the overall fundamental picture.
To interject with some European prices then, in terms of euros a megawatt hour, I mean, we've got prices, I think, for the front month around 12 euros a megawatt hour, and that's very similar to like day ahead prices. And also similar to summer, which seems crazy.
It does seem crazy, yeah. Again, because before, if you look at the markets, there was always a spread, thinking about what's going to happen in the summer, thinking about fillage and storages, making that price a bit higher. The flattening of the curve or the narrowing the spreads indicates confidence. So we could see sub 10. I mean, I think I said it last year at some point where I think we see sub £10 megawatt hour TTF, and it happened. And I think it could happen again.
10 euros.
Sub, I think it went to 9.80.
Yeah, it did. Yeah.
And I think, looking at where we are now, I think that's a possibility again.
And how come winter then, like going further out, how come we still see this rise in, where's the expectation?
There's always risk in winter. I mean, let's be honest, winter's still a long way away. There's always risk in winter, whether that be weather risk, supply risk, storage concerns, LNG concerns, which I don't think will happen looking at the way the market is now. So there's always risk premiums in winter, and if you look at the curves, you'll always find as you get closer to that winter point, when a lot more of the fundamental data becomes available and a lot more succinct, that's when you see the price start to fall. It happened last winter with the winter contracts. You saw a real fall as we came towards the end of that expiry date.
And has it really all been about the LNG that has arrived in Europe in these past 12 months?
It's had a massive impact. I mean, we spoke about it for years. I think we were, where is this LNG glut?
For it to happen.
And it finally appeared. It's finally appeared now. And when you look at the major players involved now, Australia, they're ramping up and forecast to be the number one exporter this year. You look at the US, and we all know what's happened there with Donald Trump and his freedom gas. And then you've got the Qataris now, who before could sort of not dictate, but they kind of had a bigger impact. Now, they're going to have to not accept price is the wrong word, but they're going to have to try and compete. They've now got proper, real competition, especially into Northwest Europe.
Because the Qataris just pipped the Aussies to top exporter last year, didn't they?
Exactly. Correct, yeah.
But I think it'd be interesting to see now what happens in the standoff between the US and Iran. We're in a very uncertain phase of this kind of
very uncertain
of this conflict. So, and I think if something happens, especially on the Straits of Hormuz, how do you think this will play out? And certainly for Qatari LNG, I mean, a lot of it could be locked in.
Yeah, a lot of it. And again, I mean, this for me is one of the biggest concerns at the moment. And I know if you watch the news reports or watch Trump's press conference yesterday, he sort of dialed down the rhetoric. The Iranians sent a few missiles. That's them saying, okay, we've got some revenge. They said that several US servicemen were killed, which obviously didn't happen. That wasn't the case. But they've sort of placated their massives, so to speak. So maybe we will see it dial down. They know they're not in a position to really challenge America, especially with someone as, I was talking to someone this morning, someone as volatile as Donald Trump. I mean, 2 days ago he's talking about bombing religious sites and stuff. Yesterday he sort of took a step back from that. He said the Iranians are dialing down, we're dialing it down. So I think we're going to see a slight stability, but for me, there still has to be some risk, quite strong risk that something's going to happen. The person that was taken out, so to speak, was literally the number 2 in Iran. You saw that Ayatollah went to his house to deliver a sermon, which doesn't happen. So I'm still not convinced that Iran have finished. I'm still not convinced by that. I mean, they might say that, but I'm still not convinced. And we saw that jet that went down, and there's now talk, was that a stray missile?
I mean, that risk premium, and where it might sort of affect prices at all, I imagine, is further out on the curve in terms of oil indexation, blah, blah, blah. But, I mean, the near term, the fundamentals are telling us that we're quite satiated, right? That we've
Correct.
got, right? So if anyone's got a risk of being locked in, I guess, it's the US production, isn't it? Is that
the prices? Yeah, at the prices. Yeah, I mean,
So next quarter, could we actually see US LNG stop showing up in Europe, because they're still bringing
they're still bringing lots. Yeah, and I think it depends as well on each producer and their different margins actually. But I still see, if you look at the Henry Hub price as well, I still see a continuation of LNG, and I think some of it might not even be price sensitive. It might be coming from higher up, driven by people like Donald Trump talking about his freedom gas. You could imagine him say, I don't care if you're losing a bit of money, let's get that gas into Europe. Let's try and keep the Russian gas away, which is obviously not going to happen now, but that was always why they're trying still to sanction Nord Stream 2, but I understand now another company's coming to lay the final bits of pipe. So I think US gas is here to stay for the time being. You've seen it come in when the prices were low. You've seen it still come into Europe in abundance. So I don't think at the moment US gas is going to be disappearing anytime soon. And also in terms of market share, again, that's quite important to them.
But just before we kind of started the podcast, you're talking about your concerns about demand. Like, where's the demand going to come from to absorb this? So if demand stays weak, surely there has to be some kind of supply response somewhere. So
correct. Yeah, I did. I mean, I was alluding to that earlier. That's one of my concerns of the next few months. Where is that demand going to come from? And at some point, like I said, not even just in gas, but in LNG, there's a producer pain point where once they hit that pain point, they're going to start easing off on the supply. That's why I don't think there's a massive more amount of downside in both markets at present, due to where we are. We're very low across the curves in LNG pricing and gas pricing.
But I mean, it's all pointing downwards here. I mean, where are the bullish elements? I mean, potentially
it's all potentially.
It's all potentially.
At the moment, it's all the old classic hypothetical risk.
Yeah.
Where is it coming from? And like I said, Langled might go down again. 40s pipeline happened in the UK, might crack again, and these are all what ifs at the moment. So you're correct. I don't really see a massive amount of bullish concerns at this moment. I'm not saying I'm completely 100% bearish, because I never am. However, looking at where we are now, the scales are firmly in the bears' favour at the moment.
And you alluded to one of our old favourites, the wild card of the French nuclear situation.
Yes.
So if we get, you never know, really, something could happen there. I mean, we got a period of 10-year inspection, fourth 10-year inspections happening this year.
Exactly.
And who knows what that might unearth, so.
That's always been a concern for me. And towards I think it was towards the end of last year, we had that concern about a lot of these reactors having different problems. And I know that's ongoing. This is where we need Chris, our resident French expert, because there is more concerns now. And I was speaking to him earlier towards the end of the year about that. And he was saying, there's still, as we know, there's more inspections due. And there's always that uncertainty with French nuclear. You can never quite be certain that it's going to be outturning at a consistent level throughout the year. And again, if we lose a lot more of that for a sustained period of time, there's a lot of gas going to be used for power demand for power generation across Europe. So that's always that's always high on my list of concerns, is the French nuclear situation.
What about the role of Asia in all of this? Because I mean, it was kind of the absence of that continued growth in Asian demand last year that saw a lot of that new supply having to be forced to Europe. Is there any sign that Asians are going to be resuming their...
Not at the moment. If you look, again, I've said this before, it's a very similar situation to Northwest Europe in terms of what happened to their market. Again, they typically in the winter soak up a lot of supply to fill their storages. Like Europe, their storages are already full. Again, typically there's a lot of heating demand over the winter period. Again, temperatures in the major demand centres of Seoul, Beijing and Tokyo, weather was warm. They didn't experience, as of yet, a real sustained spell of cold weather. So that's impacted them, not only in terms of filling the storages, but soaking up the supply because their storages are so high. I saw reports of Chinese buyers reselling cargoes, or cargoes that they already previously purchased. They're now reselling them because where do they put it? Their storages, as they say, are topped. They've got topped out storages across Asia, and even with the coal to gas switching, renewables growth is something you need to take into account. They're building some of the biggest renewables globally in terms of wind, in terms of the new 3 dams they're going to be building. So again, that's taking away more demand from the gas sector.
They're also
and the power of Siberia.
Yeah, exactly. They're also intent on building out their domestic production, right? Diversifying their supply.
Exactly.
Of gas.
I think now they've started to build some stuff, but they're just lacking in infrastructure in terms of in pipelines. They've built some infrastructure where the power of Siberia comes in. There's not big gas demand there, so they need to get that down to some of the industrial big gas users. But again, it's not happening at the moment. So that's also the Asian side of it is also having an impact, and the trade wars. Trade wars have impacted, production. Trade wars have impacted a lot, not just in Europe, but also in Asia as well. So their markets are in a similar situation to us, and they're also benefiting not only from supply from the power of Siberia, but also supply from Australia, who, as we know, are probably going to be the world's #1 exporter by the end of this year. They're sending a lot of gas to China as well.
I remember at the beginning of last year was when we first started to hear people start to say, oh, well, this tight LNG market, maybe it's not actually so tight, maybe it's going to be loose for a little while. And then they started to push back their expectation. Oh, it could be loose until the end of the year. It could be loose next year as well.
Yeah.
When do you see the tightness emerging?
I agree with that as well, and I think if you look at a lot of projects, I think it was the record in terms of projects that went through FID last year in terms of, I haven't got the exact number, but it was a record. It broke the record. I think it hadn't happened for about 7 or 8 years where we saw that many projects pass FID, and a lot more million tonnes per annum were added. So where does this demand come from? And this is what I said to you guys before we started. One of my main concerns is, where is demand coming from at the moment? Because at the moment we don't see it, not just in Europe, but also in Asia as well. We don't see, maybe an improvement in economic conditions might help. Some severe weather would help. Maybe an LNG supply issue, but again, production is ongoing. New facilities are opening, Cove Point, Elba. They're opening consistently in the US and Australia as well. So for me, at the moment, I couldn't tell you where I think that demand will come from. I still think this market will stay loose. People are talking about 2022 with gas demand rising. We might see a bit of tightness, the German situation, etc. Phase out of coal across a lot of places. Might see a resurgence of gas demand where we might see some tightness. But a lot of these people now are producing or looking to expand facilities in anticipation of what's going to come out from the German side of things.
It seems more kind of hope than expectation. It's hoping, that demand will come from somewhere.
Yeah,
but again, you mentioned, we were talking about Asia, but there's what we see from Asia is increased supply. I mean, Turk streams come on, can't come on. So what's the impact of that, for example?
Well, that again is going to impact. We've got more gas coming into Southeast Europe, and again, any more concerns coming from them. If they had any supply issues, it would have been a drain on supplies from Northwest Europe. But now, more supplies coming in via that route. again, it tempers demand from that side of it as well. So it's just there's so many more supply sources now and diversification in supply. And will Nord Stream 2 happen this year as well? Some people say it will happen into Q2. That's another thing to talk about as well. Even more gas coming into Europe. Again, where is that demand coming from to soak up all this excess gas? And again, we always resort back to it, but the storages they're still nearly full. They need a real drain to make the summer, alluding back to previous question as well, to make these summer prices start to react and be nervous about perhaps massive injection demand in the summer. But status quo remains. We're going to see this continue.
With this ongoing supply glut, how has this, especially in terms of LNG, how has that transformed the market in terms of the trading of this commodity? I mean, you were talking a little bit about this before we started. I mean, I think there's a very interesting point here.
Yes.
Could you elaborate on how this this incredible oversupply has impacted?
Of course. Well, now we're seeing LNG futures being traded a lot more. The market is now becoming less dependent on the long-term supply. The old school long-term supply contracts, they're more not a thing of the past, but people now want more things on the spot. And that's been reflected if you look at the churn rate, which is the amount of times a contract is bought and sold before it's delivered. At the moment, it just hit, just towards the end of last year, we saw it hit 10 to 1 in the LNG market. Now, 10 to 1 signifies a liquid market. And to put that in comparison, the churn rate for TTF is 25 to 1, and the churn rate for crude oil, which is the most traded, is 100 to 1. So that also, for me, was a big sign that we're moving. That market is changing, faster, more dynamic, more supply demand responsive. And again, the more the churn rate increases, the more availability, the more liquidity, the more the market price increase cap will be there. It will need a lot to push the price even above $10 per MMBTU. So the churn rate for me, it's a very important indicator of how the world is now seeing the global LNG market, not just now, but moving forward. It's going to move. We're going to see a lot less of this long-term contract, or even oil index LNG contracts now are starting to fall, and everyone wants it on the spot because it's there. It's there. You're seeing tracking ships. You see a couple of ships now. You see them moving. Destination LNG was coming into grain. Oh no, grain's pretty full. The high seas happened. The same cargo then went to China. It shows you how the market is shrinking, whereas previously we wouldn't have seen that.
And I guess if the upshot of this is lower for longer gas prices, and we've got a European Commission intent on sharpening CO2 prices, I guess we're going to have an earlier demise of coal than is perhaps been expected until relatively recently.
Yeah, for the coal market, I've always been. Most coal analysts don't like me now because I've said it for several years now. The coal market is dying, and we're seeing that now. A lot more decommissions happening. A lot more countries have actually started cutting their coal production a lot earlier than they previously said they would. Obviously, the price rise and the changing of the carbon market helped. And we're going to see a lot more clean gas fired power generation. So I think, it's again going to have a big impact moving forward.
Wayne, there's so much more we could discuss. There's so much more. So I look forward to having you on the pod again, and we could go into more detail and see how this has all panned out. So that's about all from us this week. So thank you very much, Wayne, and thank you, Nathan.
Thanks for having me.
You're welcome.
Look forward to speaking about this topic again. Remember to keep up to date with all our stories on Montel News, and follow us on Twitter, LinkedIn, and subscribe on Apple Podcasts and Spotify. Thank you and goodbye.